Welcome back. I'm Pratap here. Today is the 12th March 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. So even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our YouTube channel NeoStock. So all the videos I kept in a playlist, Supply Demand Zone Price Action course at our channel. Even I provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these videos one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. Please join in the Telegram channel. It will be helpful to you. Each time when we release a new video, we will provide an update in the channel. Now let's get into analysis part. Before getting to the high liquidity zones, let us look into Nifty and Bank Nifty that we have the support and resistance levels we have identified with the help of supply demand zone chain video. See, these are the levels for Nifty. See, today what happened today, Nifty, see, this is the one already pierced yesterday. The reason why I kept is just to tell you, pierced zones will be easily violated. See here, easily it's gone. This one is violated. But this is the one we have drawn yesterday. In our analysis discussion, yesterday we drawn this zone, supply zone. See, today it got resistance from that supply zone. So around 10 o'clock candle it reached. See the push. It pushed the prices up to 25 minutes high liquidity zone. It has given 160 points move from the supply zone to this zone. If anybody would have taken 25 minutes high liquidity zone, again if you would have taken a long trade, see it looks like it is just pierced, but this is within your stop loss buffer limit itself. See, in the recent time we've been seeing stop loss buffers quite frequently for many stocks. Even yesterday also we have seen a stop loss buffer for Adani Port. We got a trade within the stop loss buffer. Even today also you will be seeing in some of the high liquidity zones. But I will show you with the exact calculations part. I will explain today about the stop loss buffers. Anyway, our next training lesson is going to be on stop loss buffers. Probably during this week, during this weekend or before weekend, we will discuss about stop loss buffers in detail for all the time frames. But today I will give you explanation for 5 minutes time frame. So Nifty is within this 25 minutes high liquidity demand zone within this stop loss buffer. Let me change it to 25 minutes time frame. See here, this 25 minutes high liquidity zone is within 125 or 75 minutes demand zone. Both are all high liquidity zones. Just be asked if in case if you would have taken a trade in the 25 minutes high liquidity demand zone, you are within the trade. And after that it gave you another 115 points move. Already it gave you 160 points from the supply zone to this 25 minutes high liquidity demand zone target. Now again from here it has given another 115 points move. That means this Nifty is moving within our high liquidity support and demand zones we have drawn at different time frames. Within these ranges it is moving. See, this is the range we have drawn. If now this range is broken, probably this is going to be the range. Even if this range breaks, probably the next range could be this is the one. So this is the supply demand zone chain will always help you where exactly the actual order flows are there for Nifty or even for Bank Nifty. Now let us look into the Bank Nifty. Bank Nifty is even more amazing. Extraordinary. Let me show you how Bank Nifty moved today. See, we have seen this high liquidity zone is working very strong. Even today you see it has given a trade here. Let me move to 5 minutes time frame. Today it has given another trade at morning 9:30 candle today. And after that, Bank Nifty moved 600 points up. 600 points move. From here again it came down. What is the reason for moving down from here? Because the daily zone, this is a daily zone. At the daily zone, see here, you have a 5-minute zone confluence. Here we have the order flow. We have a drop, 2 base candles and a drop candle. Exactly today, Bank Nifty reached to this daily zone where we have the 5 minutes order flow, which pushed the prices down. Now you see this 5-minute zone is finally violated. But by the time this 5 minutes demand zone is already supported, first time, second time, even third time. And finally, in the fourth attempt today, it failed. If anybody would have taken a trade even for the fourth attempt, your stop loss would have been hit here. But okay, fine. Before that, it gave you extraordinary profit, nearly approximately 600 points, a little over 600 points. This is the move. If anybody would have taken a short trade here, because shorts are activated, yesterday I told you, the moment prices entered into this daily supply zone, and inside daily 75 minute supply zone. Inside 75 minutes, again 15 minute zones. When all these zones are triggered, the shorts are activated now. That is what I told you in our yesterday's high liquidity zone. Now they will become more powerful. See, you have seen this, in this short, it has given the short. Maybe if anybody would have gone for a short here, because this is a daily zone, and having this 5 minutes confluence, you would have got another 600 points profit here. But actually it has given 900 points from here to the next 25 minutes high liquidity. But this 25 minutes high liquidity demand zone is having zone confluence with 5 minutes high liquidity demand zone. Both are overlapped, but this is a little below. This will be this 5 minutes high liquidity demand zone will also act as a bear trap for this 25 minutes high liquidity demand zone. But anyway, today this 25 minutes zone is not violated, just came to the close to the digital line where the overlap is there. This 25 minute zone and 5 minute zone overlap is there. Till that point it came, and from here again it gave another 300 points move. See this 5 minutes zone, this 5 minutes high liquidity demand zone, see here, it gave you 300 points move, 600 points move. From here to here it is 600 points move. Now this 5 minute zone is violated. Now the next 5 minute zone, which is having confluence, this 5 minutes high liquidity zone, which is having confluence with 25 minutes high liquidity demand zone. Because this 5 minutes high liquidity zone is the real order flow. Let me delete this, you will get clarity. I am deleting this 25 minutes high liquidity demand zone just for time being. Again I will add. See here, today exactly it picked up the orders from this particular. After this 5 minute zone is violated, demand zone, next 5 minutes high liquidity demand zone, it picked up the orders and gave another 300 points move. I am sorry, I think it is another 600 points if I am not wrong. Yeah, another 600 points move again. From here to here, another 600 points move. Hope you got the clarity. See here, let me tell you, from here to here, a 600 points move. 5 minutes demand zone to this 5 minute supply zone. Again from this 5 minute supply zone to the next, because this is violated anyway. From here it is 600 till here, because the move We are not discussing about the trades. We are just discussing about the movement of the prices. 900 points move from here to here. Again from this 5 minutes till the next high or close to the next high, it is another 600 points move. But if you observe carefully, these moves are happening from the high liquidity zones we have drawn. Because 5 minutes are having the real order flow. And this 5 minutes is inside 25 minutes. The real power it has shown again here. So those who have taken trades in Nifty and Bank Nifty based on these levels, supply demand zone chain, you would have got an extraordinary profits today. They worked very well. In a perfect way they worked. Okay, now let's get into our high liquidity zones. Yesterday we identified 3 high liquidity zones. Out of these 3, 2 zones are valid and 1 zone is invalid because we know that the zone will be violated, because we know when a zone will be violated. But institution did not violate. Instead, they created 1 more zone and pushed the prices. That I will explain. And out of these 3, we got 2 stocks, we got trades. We got 3 trades in 2 stocks. And one of these trades, stop buffers played, the stop loss buffer played the major role. Even yesterday we have seen stop loss buffer. It protected our profits. Even today we will be saying one of these trades. Especially the second trade in Exide Industries, the stop loss buffer, how exactly it protected, I will show you with calculations, so that it will be a learning for you. Anyway, during this week you will be learning stop loss buffers concept. So let me show you Exide Industries. It is a daily high liquidity demand zone. We have a drop candle, 4 base candles and rally candle. This is what our software has reported. And this one is already tested earlier couple of times, and today 3rd time it is tested, the zone. And how I fine-tuned I will explain. So obviously while fine-tuning you have to go higher time frames to the lower time frames. Your higher time frame is daily. From daily you should go to 75 minutes. So in the 75 minutes, when I fine-tuned, I identified 2 zones, 2 valid 75-minute zone. This is a rally, 3 base candles and a rally candle. You might be wondering how it is a rally candle. You add the hidden body here. If you add the hidden body, this entire thing is going to be a rally candle. And we have enough range to qualify it as a leg out candle. That way we have drawn this zone. And inside we have a strong order flow. And another one is a drop, base, rally. This is another zone. So these are the 2 75 minutes high liquidity zones identified inside this. Inside daily high liquidity zone. Again recently, in the recent price action, another drop, 2 base candles, rally is also there. This is recently created 75 minutes inside this. And if you look into this, the previous one and the recently created one, they are overlapped with each other, the 75 minutes. If 2 zones overlap with each other on the same time frame, they are called LOTL. So that means this newly created 75, the old 75, both are overlapped with each other. That's why LOTL zones. This is what you observed from 75 minutes time frame. Now let's move on to the next time frame, that is the 15 minutes. The 15 minutes we need to look into inside the 75, not outside 75. First, let me explain how I fine-tuned here. We have a drop candle and a rally candle. 1, 2, 3, 4 base candles. Because here I am adding hidden body, that's why this become a leg out. After that, follow through candle. Again, one more follow through with gap. That is a different story. But here we have drawn a zone. Sorry, this is 5 minutes. Let me go to first 15 minutes. So here we have a drop, base, rally, and again with a gap, another candle. This is a ERC candle. And here within this again we have drop, two base candles and a rally candle. But they picked up the orders, this zone. Because they picked up the orders, we cannot plan trade in this zone. That is a different story. Just how we are drawing and we are identifying whether to take the trade or we should not take the trade, that is what we are discussing. But actually, we won't plan trade in this zone. And this one is very strong, drop-based drop. Again, we fine-tuned to 5 minutes. Prices came very close. Probably it works very well next time prices are entering into this zone. But here we found a LOTL zone. We should also look into that. Here only 75 and 75 are overlapped, but not the other zones. So this 5 minutes is still a fresh one. If this is violated, then we can pick up the orders. But this 75 is looking very strong. A lot of strong orders are there. So here we identified a leg-in candle, ERC candle as a leg-in, two base candles and a rally candle. So within this area, identified two 5-minute zones. This is today's trade. This we discuss later. Now within this 5 minutes, we have two 5 minutes. We have drop, base, rally. But this one is again picked up the orders. So we don't give much importance to this 5 minutes. This is a fresh zone. We have a leg-in candle, ERC candle, leg-in, base and a rally. This is the 5 minutes level. Why we are saying ERC? Because this candle length is almost same as this one. Leg-out candle. And here we have the real 5 minutes order flow. So we want to plan a trade when prices comes into this zone. So that is what happened today. And today, prices get into this area. First, let me delete this. Why I am deleting, I will explain. Because this is today's price action during the live market. So this is the candle when today at 11:25 candle it reached the zone. But you may say, but it didn't exactly touch. Generally, what we do, we add some small buffer. This is only a 15 paisa gap. The gap is 15 paisa. Generally, what we do, 0.01% buffer we will add. 0.01% in general. This is the price. This is the zone, the high of this particular candle. Let me say 31805. 0.01 means 30 paisa up to 30 paisa. You can add the buffer entry for your entry, taking the place in the entry. Generally 30 paisa or 20 paisa, depending on our risk calculation. But anyway, it is very small. Definitely you would have placed some 20 paisa or 30 paisa before you would have placed the order. But the gap between this low of this candle and this demand zone is only 15 paisa gap. This is 31805 and the low of this candle is 31820. That means 15 paisa, just gap. So your order would have been executed here. You need to consider this as an order. If you don't add buffer, obviously it won't be executed. But generally you won't place exactly at this zone. Because here we have institutional orders, pending orders. Generally just a few paisa before you will keep your orders. So that is what. See, that's why because the order flow is there until 15 paisa before this zone. See the rejection after that. This is a very big rejection. After that, slowly prices moved and reached the target. And this is the way Exide Industries at 11:30 candle, 5 minutes candle, 11:25 minutes, 5 minutes candle, it gave you the entry, and 12 o'clock, 10 minutes candle, it reached the target. So almost in half an hour or maybe 45 minutes, this trade is completed. And how much profit it has given? Exide Industries has given a profit 12,060 rupees profit, which is 5.9% ROI. 12,060 rupees profit, which is 5.9. That means close to 6.1. Just 0.2% difference. Our average ROI I'm talking about. But observe here what's happened after that. Okay, after reached the target, but while reaching the target, see, observe the price action. Another 15-minute zone is created. We have a drop candle, 2 base candles, and again a rally candle. Where it happened? Inside this 75. If it is outside the 75-minute zone, you would not have considered. Because the price action is within this 75-minute zone, but I have to consider here only type 2 proximal level only I have to draw. So this is a 15-minute zone. This is a drop, 2 base candles and rally. But where you need to place your order? At 5 minutes. So let's get into 5 minutes. Next time again, second, if you want to take second order, if price retraces, where you want to place, that is what? Look into this. You have a drop, base, rally. Let me draw the zone. This is a 5 minutes demand zone. This is a drop, base, rally. The point you need to observe, this is the area, it's keep on picking the orders. See, it picked up the orders, it picked the orders, it picked the orders. That means this is acting, maybe it could be a high liquidity area. Maybe. We don't know. It is just one assumption. Okay, because it is already picked up the orders, can we really take a trade next time again when it is retraces? It is doubtful to you. But still we can trade. The reason is, see here again a drop base rally. But this drop base rally is picked up from this zone just below. And moreover, this is LOTL concept. If you draw one more zone here, but this is above our 75 minutes area, maybe you can adjust like this. The zone. Maybe type 3 level you can take. If you can place an order here, but stop loss should be below this. Because it is LOTL concept. And instead what you can do, because this is a fresh zone, but you can delete this, because the real orders are picked up from here, when next time prices come here, you can place an order. So that is what, here we place a buy order, but what happened? This zone is violated, right? That means, is our stop loss is triggered? No, our stop loss is not triggered. That is the magic here. Why? Because it is exactly within our stop loss buffer area. Generally what we do, below we keep a stop loss buffer. How much we have to keep stop loss buffer? Okay, those who already completed the courses, you are already aware of it. But those who are currently learning, during this week you will be learning. What is the stop loss? Stop loss buffers vary from time frame to time frame. That I will be explaining. But 5 minutes I will tell you. It is a 3% of ATR value, average true range value. What is that ATR? I will explain during our training sessions. So what is the ATR value? Let me show you. Here we have a ATR indicator. And the name of this stock is Exide Industries. Let me copy the stock code. So what I am doing, I am trying to get the ATR values for Exide Industries. Okay, what is your trading date? That is today, 12th. The previous closing day is 11th. The 11th ATR value you have to take. That is 8.67 is the ATR value. So let me open a calculator. And 3% of this ATR you have to use for 5 minutes zones. 15 minutes the value will change. But 5 minutes, 3% of the ATR. So not only 3 into, okay, the next point I will explain after showing the value. Okay, first let us calculate. 8.67 into 3 divided by 100. 3%. How much you got? 26 paisa. But here the value should be rounded to the next value, next nearest value, next nearest. So 26, what is the next nearest rounded value? 30 paisa. Instead of saying 26 paisa, you should round it to the next nearest value. If it is 25, you will take as it is. If it is 24, you will consider as a 25 paisa. Anything above 25, you will consider as 30 paisa. Anything above 30, you will consider as 35 paisa. Like that, you need to round the value. So here you need to add, this is your stop loss buffer. To whom you need to add? To the distal line. If it is a supply zone, you will add. If it is a demand zone, you will subtract. Because below the distal line, you need to add. Below means you need to subtract the value. If it is a supply zone, above the supply zone you need to add, above supply zone distal line. So for supply zone you will add the value, for demand zone you will subtract the value from the distal line. Okay, 30 paisa we need to subtract because this is a demand zone. Okay, what is the low of this? Because this is the distal line is the low of this particular zone. The low is 319.75. 319.75 minus 30 paisa. So 280, sorry, I have given 30 rupees, not. We have to give 30 paisa, not 30 rupees. Sorry for my mistake. So 319.75, 319.75 is that value? Let us check again. The low of this zone is oh, mistake again. The low of this zone is 318.85. It is not 319. How we are taking 319? How it came? This is the high of this zone. Sorry for my mistake. The low of this particular candle, that is the distal line. The low is 318.85. $318.85, the low of this candle, minus 0.30, minus 0.30. So 318.55 is our stop loss. If the price goes below 318.85, you need to exit from your trade. Until 318.55, you can hold your stock. Once the prices goes below this, you need to, your stop loss should be triggered. Okay. Now, when this zone is violated, what is the low value? Let us look into the low of this candle. The low below this zone, see the low, this is the low, the red color candle. The low is 318.60. Ours is 318.55. Let us look into the next candle. Next, one more green candle also, low is there, wick is there. What is the low? 318.55. The low of this candle is 318.55. Exactly 318.55. Our stop loss buffer just saved the trade. See, there is one more here also. Long wick is there. This leg out candle here, rally to base candle. A new zone is created here. Just violated, another 5-minute zone is created. So what is the low of this candle? 318.60. Ours is 318.55. So it is within the stop loss buffer. That means the stop loss buffer just protected the trade. Because stop loss buffer just protected the trade, now we got again another profitable trade. So once again it reached the target. See, earlier here, just before this 5-minute zone, in this candle, we got the entry by adding small entry buffer. And here again, next time when it reached, again we got another entry, but here it is just pierced the zone. It's not pierced, it's violated. This 5-minute zone is violated, but within our stop loss buffer. That's why we are not exited from the trade. We would have exited if prices go below 318.55. But prices came up to 318.55 and stopped, and then they reversed. That's why stop loss buffers are very, very important. Yesterday you have seen stop loss buffer for Adani trade. It saved our trade yesterday. Even Nifty also you have seen the 25 minutes high liquidity zone. That is just pierced, but that is within your stop loss buffer area. So by the time we are getting into our next lesson, you people practically are understanding how important these stop loss buffers are, how they are saving your trades. And recently you have seen quite frequently, even couple of days back, couple of days means couple of trading days. The last week also, you have seen couple of trades also, the stop loss buffers just protected. Just 5 paisa they pierced and we got the success. Maybe stop loss buffer would have been 30 paisa or 35 paisa in that stock. But they just pierced 5 paisa and then reversed. So that's why it's a very powerful concept, stop loss buffers. So today we got otherwise we would have got lost today. If you would not have kept this buffer, stop loss buffer, you would have exited from your trade. Later on it turned up and again gave profits. You might be thinking, okay, I exited from the trade, but it gave the profit. But today stop loss buffer, it just saved the trade and finally made it a successful trade. And the second exit industry trade, we got 8,820 rupees profit, which is 4.3% ROI. Earlier one is 5.9, but now the trade is a little above the previous trade. So now ROI is reduced to 4.3. But both together, you got a 10.2% ROI you got in today. And both together you got 20,880 rupees profit. So this is about Exide Industries. And the next one is Laurus Lab. See, if anybody would have taken a trade again here, I didn't actually count this, but strictly speaking, see here, this zone is violated. Now a new zone is created within the 15 minutes area. The 15 minutes is within 75 minutes area. If anybody would have taken a trade here, in this zone, probably somewhere. But when is this candle? This is at 2:30, after 2:30. After 2:30, I told you, you should focus only on 5 minutes targets, not 15 minutes. Last 1 hour, you should look for, if anybody wants to plan a trade, because this is a high liquidity, still you would have got profit. I didn't consider, but see here, how much profit you would have got. This is our 5 minutes target. Drop, base, drop. This is 5 minute supply zone. If anybody would have taken a trade here just before this, it gave you profit. And when again at 3 o'clock it reached the target. Generally, people don't take during last 1 hour, they avoid. But high liquidity traders still, They can dare. That is what I've been telling. How much profit you would have got? So this is the target. What is the target value? This is the open of this candle, 320.20. Because sometimes somebody will ask why we didn't take a trade. Again, prices reach it to this zone. So for that I am telling, if in case if you would have taken, the 5 minutes is the target. You may ask a question, RR is there or not. Let us check even that also. So long position. So a little below could be your stop loss. A little above could be your entry. And this could be your target. How much it is there? It is only 1:2. Only 1:2. Mostly you don't take trade. 1:2. Your RR is only 1:2. 1:2.0. 1:2.5 is there. At least experienced people can consider that. But I have seen some experienced people, even they take 1:2, but I don't recommend that, even for experienced people. Minimum worst case, if you are very experienced, at least 1:2.5 or 2.5 should be there. Because RR is not there, you won't accept this trade. Even though it is successful, you would have got a profit. How much profit you would have got? 320 minus somewhere here, because you are adding buffer. Let us see the low of this candle, something like that. 319.05. You got 1.15 profit. 1 rupee 15 paisa. Margin 0, the margin calculator. Lot size is 3,600 into 3,600. It has given you 4,000 return it has given for 5 minutes. But still we don't take this because RR is not good. Okay. So this is about Exide Industries. Now let us look into Laurus Labs. Laurus Lab is also given. This is actually a 75-minute zone. First, let me show you the 75 minutes time frame. Here we have a drop, 2 base candles and a rally candle. And follow through candles. So excellent zone. So we fine-tuned this 75 with 15 minutes. So inside we identified 2 15 minutes LOTL zones. This is a leg-in candle, ERC candle, 2 base candles, rally candle. And again prices came down. Here it picked up the orders from this zone. Because it is tested, we don't consider the below one. But lot of rejections. Is it a high liquidity area? That we need to check. Okay, here drop 1, 2, 3, 4, 5, 6 base candles and a rally candle. This is the 15-minute zones. These two are 15-minute zones. They are LOTL zones. But we need a fresh, fine-tuned 5-minute zone. So that is the reason why inside this 15-minute zone, we need to identify 5-minute zones. See here, we identified a leg candle, leg-in, base, rally, base, rally. A fresh zone inside the first 15-minute zone. Moreover, this is overlapped with the first 15-minute zone and second 15-minute zone. For both these zones, exactly in the middle it is there. This is the zone joined both the 15 minutes LOTL zones. And there is one more drop, base, rally. See here, this one is picked up the orders from here. Again, picked up the orders from here. So maybe strong order flow. I don't know whether it is high liquidity or not. I am not sure. We need to check. But this is the area it is picking the orders. If it is high liquidity, next time, if this zone is violated and come here, we can plan a trade. But anyway, we have a fresh zone, rally, base, rally. And today prices enter into that fresh zone and reached the 15 minutes target. Here we have a 15 minutes supply zone is there. We have drop, base and a drop. But this structure is not good, that's why violated it is easily. That is a different story. But for our target point of view, okay. But planning the trade, we know this, see this sluggish structure. Such kind of sluggish structures will be violated easily, see. But anyway, this is the target point of view we are considering. And it gave an entry at what time? At 11 o'clock 45 minutes candle it gave the entry. And 1 o'clock 45 minutes candle it reached the target. So within 2 hours the trade is completed. See, entry is at 11:45, 15 minutes candle. If you want to exactly see in 5 minutes candles, this is at 11 o'clock 50 minutes candle. This is 1 o'clock 45 minutes. So close to 2 hours. So within the 2 hours this trade is completed, but how much profit it gave? Laurus Lab has given 9,860 rupees profit. But see the ROI, excellent, 7.1%. Because the lot cost of the lot is very less compared to the others one. This one is around 2 lakhs rupees, one futures lot. This one is only 1 lakh around 30,000 rupees. That's why ROI is excellent, 7.1% ROI we got. So Laurus Lab is a very good trade. See, it has given multiple trading opportunities today in Exide Industries. And the last one, what is the last one? SBI Life. SBI Life, I didn't fine tune the zone. I know it is a violated. Let me show you. This is a 75-minute zone. We have a rally, we have a base, and we have a drop, but this is a ERC candle. If you want to rally, base rally, you want to consider and draw the zone should be drawn like this. And if you look inside this 15 minutes area, I didn't find any proper 15-minute structure here. Even if you consider this is a ERC candle, 3 base candles, and you would have drawn a zone like this. A 15-minute zone. This is the 15-minute supply zone. Now get into 5 minutes. You will see the real structure here. See all these base candles. Base candle 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. See here. Look here, today what happened to this 15 minutes area? Easily violated. But what happened? Why it is not violated? Went very close to the distal line. But why it is not violated? The reason is institutions inside they created a rally-based drop and pushed the prices down. So that is the reason why we didn't plan a trade in this zone. But later on created. Now you may ask a question. If there is a retracement, can't we plan a trade? Yes, in the retracement you can plan a trade. You may say the retracement, okay, retraced here. Why we didn't take a trade, you may ask. See, the risk is very high here. Probably you would have planned our trade like this. To minimize the risk. So that's why the next retracement prices did not reach up to here, did not reach. See, this is a price action in today's trading. This rally based drop is in today's trading, this is the price action. See, today morning 9:30 candle, this is 9:35 candle, and this is 9:40 candle. Because institutions decide to create a zone, that's why this zone is formed. Otherwise, this would have been violated easily. Because of all these candles, all these base candles. That is what I told you. Even in our training lessons, in many of our HLQ analysis, these zones will be easily violated. There is only one condition that can stop the violation. Only one condition. Stop the violation. What is that condition? If institutions decide to create a new zone inside this area, at that time only, this zone won't be violated. Today, that is what happened. Institutions, maybe they decided at the order flow. So that's why it did. Those who have taken up to wick, wick to wick means up to here, but we don't take outside the high liquidity area. Generally, you would have adjusted like this. If anybody planned, if the risk is, if you would have accepted this risk, then you would have got a profit. But I didn't consider, but still you would have got a profit. Those who have considered this higher risk. So where is this? We have a rally, 3 base candles and a drop, 3 base candles and rally. This is the 15 minutes demand zone. Demand zone. This is 15 minutes demand zone. So they would have got a profit here. In the retracement, who has considered the wick to wick, the 5 minutes, the 5 minutes trade is this is a wick to wick you considered. Instead of type 1, you considered, instead of type 2 proximal, you have taken a trade at type 1 proximal, but adjusted to the 75 minutes zone, high liquidity zone. Because outside generally we don't take. So you got an entry here. If you would have accepted this risk, this could be your reward. Then do you have RR? Let us check that. Short position. Oh, good. You have 1:3 RR is there. The only thing is risk. Because I didn't calculate, maybe it looks like it is turning into a right trade. But this is only wick to wick, type 1 proximal entry. If anybody taken that scenario we are calculating. So what is the high of this candle? High of this candle is 1551.75. 1551.75 minus, and entry is at this zone, 75 minutes zone. We fine-tuned, we adjusted the entry to 75 minutes entry. That is 1545.05. $1545.05. Let me check. Yeah, 1545.05. $1545.05, or is it 1545? Let me look into this zone. We'll get clarity. Low of this candle 1545.05. Perfect. So 6.7 risk you have to take. 6.7. Is it acceptable risk? Let us calculate. This is SBI Life. So let me open a zero the margin calculator. SBI Life on March 28 March 750, and what is 2 lakh around 3,395 approximately. So 6.7 into 750. So 5,000 rupees risk you have to bear to take that. Is it within the limit? Into 100 divided by 2 lakhs 03 395. No, you cannot accept the risk. 2.47 only. You cannot accept the risk more than 2% for your capital. Whatever you are investing on that capital, your risk should not be more than 2%. It can be less than 2%, but not more than 2%. Maximum up to 2% risk only you have to learn. You will be learning in the next lesson all these points. Maybe you can reduce this risk by position size. For intraday traders can do whoever is taking cash trades, not in futures trades. You can reduce the position size, you can take a trade. Once I explain position sizing concept in our next lesson, you will be learning, because next lesson you will be having multiple parts, and the last part you will be learning position size. First part you will be learning stop loss buffers, ATR, all these points you will be learning. You have to learn. Okay. Anyway, you can't this trade you cannot accept even size to size. For F&O you cannot plan the trade. But cash you can take the short trade with position sizing. So anyway, I am not going to do these calculations because the risk is not within our limits. Okay, this is about high liquidity zones we have generated in our previous report. Hope this analysis will be helpful to you. Let us all meet again in our next video. Thank you.